This week, there will be a lot of focus on the Bank of Canada's monetary policy decision and statement. In this video, we'll discuss our current bias for the CAD, and we'll also explain how we can potentially trade the USD-CAD currency pair this week. Hey guys, Arnie here from Forex Source, where we help you to trade and understand the currency markets better. Now, on this channel, we do a lot of educational trading content, specializing in fundamental analysis. So if you're new here, definitely consider subscribing. Guys, welcome to another week ahead video. This week's video will cover the trading week for the first week of September 2019. Now, we have a very important BOC meeting this week, and the outcome of that can possibly give us an opportunity to buy the USD-CAD. Let's jump into the video to see how we can prepare for these events. Alright guys, now our main focus point for this week is a possible trading opportunity on the Canadian dollar and more specifically on the USD-CAD again. Our current fundamental bias for the Canadian dollar remains neutral, but the risks are definitely tilted to the downside for the CAD in our opinion. To be fair, in terms of the BOC, the Bank of Canada, they have been preparing the market for a softer monetary policy outlook in their statements if we look throughout the year of 2019. When we started in January, the BOC said interest rates will need to rise over time to a more neutral range to achieve the inflation target. Now, if we fast forward this to July's meeting, all the references to rising or raising rates were taken out of the statement, and they said that the degree of accommodation being provided remains appropriate. So they have been preparing the market for that softer, more dovish stance. Now, currently the markets are expecting the BOC to hold rates at this week's meeting with the probability of a surprise rate cut at a mere 7%, but the market is pricing in a 47% probability of a 25 basis point cut somewhere in 2019. So there is definitely anticipation for easing. Now, this was quite clear in the last 2 weeks. If we look at the price action, the market showed us that they are anticipating further easing or easing from the BOC when the Canadian dollar basically failed to rally despite very positive CPI as well as GDP data that we saw over the last 2 weeks. Now, analysts have noted that the very big positive surprise of 3.7% for the annualized GDP number that we saw on Friday, they have said that that print was mainly driven up by transitory factors, especially a very big rise in exports. So that number was more of a transitory factor, that big jump to 3.7%, and the market really failed to rally. Now, when a currency fails to rally on such positive deviations or such good news, that is normally a sign for us that the markets are expecting that currency to go down. So that is something that we can just take note of from the market's response. Now, it's also important for us to note, guys, that the better than expected GDP and CPI has not really kept back the BOC from easing policy back in 2015 when the economy faced a very similar picture in terms of where they are with the outside risks, the external risks in terms of the trade war. There wasn't a trade war in 2015, but they had other external risks to deal with, and the BOC still decided to ease in 2015, despite very positive CPI and growth numbers back then. So these positive numbers isn't a reason for the BOC to step back in terms of easing. They have done it before, so that is something that we just need to take note of. Another big consideration for the Canadian dollar at the moment is oil prices. Now, as a very oil-dependent nation, any big fluctuations in oil prices can drastically affect the Canadian economy, and as a result, also the Canadian dollar. So the BOC has noted in their July meeting that they are carefully watching developments in the energy sector. So the recent drops that we've seen in oil prices should be something that they are concerned about. Now, in terms of trading the BOC this week, there's basically three scenarios that we can look for. The first one, if the BOC makes a surprise rate cut, you guys remember we mentioned there's only at this stage, there's a 7% probability for the BOC to cut this week. So the markets are really not expecting them to do that. So if they come out and have a surprise rate cut this week, that would be the best opportunity to sell the Canadian dollar at market and should provide us with a sustained move. The second scenario is if the BOC holds rates steady as expected, but they change their statement to a more dovish stance by citing that current policy has become restrictive in some way and possibly signaling that a cut is due in October. that can also provide us with an opportunity to sell the Canadian dollar. The third one is an interesting one as well. If the BOC does decide to hold rates steady, but they decide to make no changes, absolutely no changes to their statement, to the July statement at all, that would probably spark a more buy the rumor, sell the fact response that could actually see the CAD rally. Now, any rallies in that type of scenario should be short-lived, as the markets are still expecting the BOC to cut sometimes in 2019. So if we do see that type of reaction, that can possibly provide us with an opportunity to sell the CAD at better levels. Okay, so now that we understand the fundamental reasons for why we're going to be looking at the CAD this week, we can move on to the charts and look at some of the technicals. Now, if the BOC does provide us with an opportunity to sell the CAD this week, guys, we might consider pairing it with the US dollar again, just like last week. Recent data as well as Fed rhetoric out of the US has really pushed back some of the market's overly dovish expectations for rate cuts by the Fed. And we've actually seen the dollar index rally to fresh 2019 highs as a result of this. Now, with the BOC expected to cut and oil prices continuing to be pressured, we do think that the risk currently is tilted to the downside for the Canadian dollar, at least in the short to medium term, against something like the US dollar. Okay, so moving on to the charts then, guys, and looking at the USD-CAD, we can see that the overall structure that we highlighted from last week is pretty much still in play. This sudden spike that we saw downwards on Friday came from that much better than expected Canadian GDP number, but the market basically took that as another opportunity to sell the Canadian dollar from this 130.3250 level that we highlighted last week, and basically just decided to sell the CAD at a better level from this area. Now, if we follow the same process that we do every week, guys, and we use our fib retracement from this recent swing low at the 132 handle, and we extend that to the recent swing high at the 133.50, we can see that the same confluence area with that 50% fib, as well as that 132.50 level, as well as this previous support area, is still in play. We can see that this previous support area at this 132.50 has held as support multiple times over the last couple of weeks, as well as 2 times just last week alone. So this is a very interesting area for us to look for a possible opportunity to take a long entry on the pair. Now, alternatively, guys, we did highlight this important resistance area here at the 133.50. If the market decides to break through this level, we could either use that breakthrough as a possible long entry on the pair, or you can wait for a possible retest of the zone, a breakthrough and a retest, to then go for a long entry on the pair. In both cases, a safe place for the stop loss would be below this second swing low area, which would place our stop roughly at about the 131.70 handle. Now, be mindful again, guys, of this resistance at that 133.50 level. The price has rejected from this area a couple of times in the last few weeks, including last week as well. So this is an interesting area we need to look at. But as we said, if the market moves down into this overall support area, that can provide us with a great opportunity to go long on the pair. But as always, guys, take note of risk sentiment. Risk sentiment is something that can affect the Canadian dollar as a commodity currency. Take note of oil prices as well, and stay safe in the markets this week. Guys, we hope that you have been finding these videos and analysis helpful every week. If you have, do us a favor and click on the like and share buttons, as it helps YouTube to suggest more of our videos. Also, remember to subscribe if you haven't done so already, and click that bell button to make sure that you're notified every time that we release new content. We have a brand new playlist created by Jared called Forex Trading Examples, where Jared basically goes through some excellent recent trade examples showing how you can use the fundamentals to find great trading opportunities. So be sure to go check that out as well. We hope every one of you will have an awesome trading week ahead. Please make sure to keep those questions coming. We have a stockpile of videos that we're busy creating from all the awesome questions that you guys have sent us. So keep them coming, and we hope you guys will have an awesome trading week, and we'll see you in the next video. Cheers.